The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And we had a little bit of volatility yesterday. Actually, was on the Tom show yesterday afternoon, and we were chatting about a couple of instruments that just seemingly were kind of asleep during the volatility. And the golds, the treasuries, the euro, in fact, really hadn't really acted exactly, I think, volatility-wise like we expected. But we kind of focused on the scanner because the TAS profile scanner, we actually finally got launched on the TFNN network finally, and I've been talking about that for 2 months, I guess. Promises broken, and finally it's out. So it was a great day, and it was interesting showing some of the features of the scanner on a volatile day like that. And it was just incredible trading that was out there. Some of the stocks that were holding up, we identified with the scanner, and some of the ones that had kind of been showing their hand early as weak stocks in a market that was looking a little toppish, really had kind of followed through. We went through a little bit of that, but all eyes are on Greece still. And the thing I'll say this morning is that, again, anything can happen. I know that there's a default timeline set, and that's imminently going to happen. And what we want to do is try to always remember that they can change the rules at any point. They can come in and say, you know what, we're going to give them a couple extra days because we see some light at the end of the tunnel. There's a host of things that can happen. I mean, it's going to start a snowball effect in a couple hours, I would assume. But again, they could come in and say, we don't want this to happen. We're taking some new measures. Always be prepared for that as a trader. I remember gold one morning. I mean, it was just down $30-40 an ounce in a blip. If you didn't have your stops in, even with all the slippage, you still want to have stops in. That could happen, with this Greek situation. So always remember that anything can happen, I guess is what I'm trying to say. So taking a look at the S&Ps, we had really, just to give a little bit of a history lesson here, I've got the S&P chart up. We'd really focused on not taking longs for a while and trying to sell resistance, and that's been relatively profitable for us. We've gotten stopped out of a couple of situations, especially above 2100 lately. But when we get back down below and we start, this diving down with our breadth calculations of the scanner, sitting as they have been, this is our kind of our global look, 16 global indices. This is our daily look, and we're looking at the heat map relative to our daily odometers on our daily breadth. And what is that? That's I want to kind of drill down into our daily here. That's of the 500 stocks in the S&Ps. At this moment, we've got 71% of those stocks trading below daily profiles. That's very, very bearish. It's almost overextended, in my opinion. As we look at some of these historical charts, you'll see when these things reach certain thresholds, that's another indicator in itself. But these things, basically what we want to do is focus on the crossovers of when these things have gone net profile positive or net profile negative relative to those time frames. And this has been flip-flopping around. And if you haven't been watching this show, we had our June 4th weekly crossover from positive to negative. First time that had happened since September 26th, 2014, and then we reversed back positive October 24th. But we've stayed positive since October 24th up until that June 4th date. Now, we had been, preaching not taking longs for a while because of these other time frame breaths rolling over. But, what do we do now? So, again, we have a 2060. Let me just bring that out for you. We've got a 2060 weekly unfair low here. All right, that was our DMZ. We kind of poked our head back above this morning, and we've got this daily unfair low at 2066. So we're kind of sitting in the DMZ. We closed below that. We're going back and retesting the DMZ. We've not got the greatest news out there coming from the Eurozone. I'm looking at this as, again, I know we've come down quite a bit. We've had a good pop this morning already, about 15 S&Ps up. Yeah, 14.5 right now is the time of this report. But I'm looking at this as close below profiles or DMZs and then rallying back up and retesting those breakdown points. And this may be a decent time to look at this as a selling opportunity again now, with, of course, stops above that DMZ, above 2066, based on your appetite for risk. So, again, this is kind of one of those things that, in my opinion, that you lick your lips on here. We've broken down. We're going back and retesting an inflection point range. Okay, and the reason we're looking at selling that is because we're looking at our daily price situation. Again, these are going to change a little bit as the market opens towards the positive side if we stay around here. But we're looking at this and saying, you know what, we have pretty much zero reasons to start taking longs right now, and the leverage is still on the short side, especially after that index profile reaction and movements that we had yesterday and today. So again, I've probably extended that too far, but looking at our ETFs, this is our heat map grid on the dailies. There's just a sea of red across the board. If we look down into the indices and we go into, let's just go into the S&P 500. Let's drill down into this. I've got no sword on right now, and I'm going to look at the S&P 500 stocks. As you can see, we're just primarily red across most time frames. All right. Now, we took a look at some stocks yesterday. I mean, ABBV, we had John Deere on the board, Aetna. Let's take a look at AAT. These are stocks that were kind of hanging in there. So let's take a look at John Deere first. And, this was, I think by the end of the day, we were looking at this. Right now, we're trading 94.96. So again, weekly, very strong situation. 94.15 is the ultimate buy point on this. That's coupled with 94.24. Remember, John Deere had been an outperformer and really has just, the market struck this back, but it's dragging it back into this toppish support area, top of the box. Excuse me, I didn't mean to say toppish. 94.15 and 94.24. So if you're looking to buy stocks and the market can't do anything, let's just say it rallies, you want to buy stocks that are showing strength and not showing that they want to break down below profiles. John Deere is a great candidate for that. Let's take a look at ABBV. Here we go. This one, pretty good sell-off yesterday, actually. We might have better candidates to this, but you've got 65.67 sitting down there, and that's coupled with 66.12. So what I want to do is go into my scanner. Let's just do a sort here. I want to find stocks that are trading above the box on the weekly and above the box on the daily. And as you can see, there ain't that many. And where's ABBV? Hold on. Huh, okay. Let me reset the sorting here. ABBV. Okay. Yeah. Okay. So what we have here is we've got a new profile attempting to appear. So what I want, that's not going to flag when I want sheer strength. So what I did is I chose above the box on the weekly and above the box on the daily. It's not going to flag this because this is actually a bearish connotation. It's saying that we're having a possibility of new supply attempting to appear. So that's why if I wanted to sort for that, I could go in here to my weeklies and I could say new box, boom, and it's going to show me all. And let me just show on the matching results. It's going to show me all the weekly profiles of the S&P 500 that are showing the ability for a new supply area to appear. All right. What does that mean? That means that I'm going to go to ABBV just to kind of define this and pull this up. As you can see on our charts, we're showing a orange bar, new profile attempting to appear. That's why I was not a huge fan of this being the best long candidate as I just looked at it on the chart, but the scanner had kind of predefined that for me. So again, I want to, let's see. Let me reset this and let's go back to our sort here. Let's just show again the original short above the box, and these are candidates in the S&P 500 on the weekly and daily that have no hints of new profiles attempting to appear and are just sheer long plays. That's why Aetna, John Deere, Darden Restaurants, Tom O'Brien mentioned that yesterday, Nike, Snap-on Incorporated, United Health Group, UNH. Let's take a look at some of those names. Strong stocks in a market that has just come unglued, and in my opinion, the index itself may come unglued even farther. Remember, a lot of things Steve Rhodes has been saying, it's the stock picker's market. He said that a while back. I fully believe that. So trading indices is going to have some hair on it. But if you're trying to define what are strong stocks and weak stocks and how to take advantage of those based on the beta of the index itself relative to that stock, this scanner, you can't find a better tool to do that. So Aetna, AET, let's pull that up. And remember, these are kind of unmitigated long candidates. No new supply attempting to appear. Here's Aetna. Glad I met you. I had to say it. 128. We've come off previous week. These are weekly charts here. Remember, profile appearing below price action is super mega bullish. Similarly, profile appearing above price action is very, very bearish. So we had this profile appear below price action. We ramped up. We've got no new profiles attempting to appear here, but we're coming back into support at 125.87. So, the market, gives it up a little farther. Aetna hangs in there, maybe tries to consolidate above that 125.87. The good news is you on a stock like this, you can place your stops below 125.87, and for all intents and purposes, 121.70 could be the collection area bottom of people trying to accumulate Aetna if the stock market in general continues to, to plow south. So again, there's Aetna. Let's take a look at UNH. What's the UNH? Make sure. Here's our scanner, UNH. There you go. And the XLV obviously has been, a darling. Here's UNH again. Kind of Teflon coated this week. We're going to come right back, guys. We're going to take a look at a couple other things in the scanner, and we're going to look at some of the usual suspects before the trading day starts. VIX is climbing a little bit here.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, it's good to be back. Taking a look at the S&Ps again. This is the type of action. Again, if you didn't catch the beginning part of the show, we're using the cohesiveness or non-cohesiveness of this at this state of the internals of the S&P. The internals of the S&P being very, very imbalanced towards the downside, and that means that we are basically net profile negative. All right, that means the amount of stocks trading below profiles is very much overweighted toward relative to the amount of stocks trading above profiles, and that means that those profiles determine the so-called balanced areas. I gotta break into this for a second. Every time I watch these guys in Greece, Cyprus is just a, we've talked about this before. He just, guy, you want to slap him. I mean, he's just smiling. Now he's throwing it on the referendum side to get the weight off of him. I don't like the guy in general, but it seems like everybody who's over there interviewing anyone, it's like every house is white, the sun's really bright, and everybody's squinting their eyes. If you guys notice that, every reporter has Chinese eyes trying to give the report. It's always funny. It's 100% every time. As we're looking at the S&Ps, sorry to digress there, these closes below profiles, weeklies and dailies of these major inflection points, and then these rallies back up into these major inflection points, you've got a very high probability trade brewing there. And the reason it's brewing, and the reason that stops, can always get hit, that's always a possibility above that DMZ 60 into 66, 2060 into 2066 on the September contract. If you guys are trading the cash or the spiders, just do a little math there, figure out what your levels are relative to that. But these close belows and goes and rally back up into those DMZs or inflection points, and looking at the breadth as the barometer, whether it's okay to go short or go long. This is a nice little setup here, and we could have some more downside based on this alone. We could go back and retest the lows around the 2045s and possibly even lower. All right. Okay. So as we look at the S&Ps, we're going to take a look at the euro. Pretty wide range day yesterday in the euro, but really just had close to close had really not done a lot of changing here. I mean, it's yet to be determined if this is net positive or net negative for the euro, whether Greek leaves or not. It looks not that good right now for them to stay in the European Union. But right now, we've talked about this 112.25 area being a super important area from before. We couldn't get a close above yesterday, and it looks like we're still using that as the fence for the euro to move farther south. Again, it remains to be seen which way folks are going to be looking at that. But the short term on the euro, the levels have really outpaced the long term. If you'll notice this, we've got a mega wide, super wide 240-minute outside box here with the unfair highs 112.45, which is above that 112.25, and then down below, look at this. I haven't seen a 240-minute box on a currency this wide. I can't remember, 109.84. So this is saying that we're going to experience extreme volatility in this product in the short run. So pay attention to that. Let's go back and look at something that we kind of had around U.S. dollar against the ruble. This is something, I'm going to go to our weekly here. We've talked about leveraging off 53.12 down below, trying to put stops down below and just let this thing breathe higher. We've had Eddie on our show. This seems to be working out quite well. We've kind of gotten back above the daily unfair highs too, cleared a lot of congestion. It's nice to see that happening. Let's look at the dollar just to cover some of the usual suspects here. We're going to go back to the scanner, try to find some setups that are hopefully going to be relatively right for you today. Here's the situation on the dollar. Again, the weekly numbers are relatively important. You've got 95.30 sitting down here. We're coming back down, retesting. I feel like that's going to be the jump off point, kind of the close above, go back and retest on this week. And I'm looking at stops below 95.30 based on, well, you have to base that on your appetite for risk. So let's take a look at gold really quick. Gold has really just not shown itself as the the safety play, if you will. This is pretty ugly looking here for gold. We're going to talk about this a little bit farther when we come back from this break. Stay tuned, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Let's take a look at gold. We were getting ready to talk about gold when we took that break. Let's just get it back up here. Here we go. August contract. We've been kind of bearish, looking at our weeklies below that 1187 area, kind of gone back and retested. This is a very similar scenario to the S&Ps. Close below, go back and retest. Can power back above. That's what stops are for. But we want to play that probability when it happens. And this is just amazing to me, that the situation that's globally at hand and the things that may be affected, that they're, just the collateral damage, if you will. Gold is looking relatively weak, and I feel like this is going to cave in. I think we've got Tom on the phone with us. Tom, are you there?
What's happening, brother?
Hey, Tom O'Brien is here. Nice to hear from you.
How you doing, man?
I'm doing good. How's your morning going?
Good. Well, it's going great, man. I got the Taz Profile Scanner Plus up, growling and prowling.
Yeah. Did you get the latest version installed that
I
sent
did.
you a couple of emails?
I installed it last night. Installed it last night, man. Yep.
Awesome.
Yeah.
Awesome. Yeah. What do you think?
Well, I was shot the S&Ps, and what I did, this is interesting too, because literally I just came back from working out and I heard it was coming to the top of it, so I snapped one more contract.
Okay.
It's going to be interesting here, but that's what I was calling about, actually. So can we go through this the E-mini? Like I have the futures up, right?
Okay.
And I'm looking at what I did is that I got them. I know the weekly is crossover, which is huge, right?
Yeah.
And I have the way I've done it thus far. I got I was looking for everything below the box, not on the hourly,
Okay.
but on the okay. So now when I bring this up, right? I just want to walk through this with you for a second. So when I bring the landscape up, right?
Okay.
I'm bringing the landscape up so I can see that where the price is, where the point of control is above it. Intraday, if I'm trading this intraday, right?
Okay.
What am I going to be looking at here for?
Okay, so I'm just gonna. Okay, let me just make sure we're on the same page here. You're in the scanner and you're in the futures section, and you're looking at the S&P minis. Okay.
Yeah.
And what I think Tom is referring to here is he's pulling up our landscape chart he's looking at multiple profiles at the same time, and this. And he's showing the level. We're looking at the so-called level of the market with this yellow, just flat line here, which kind of tells you where the market is relative to the other time frame profiles. Now, I guess your question right now is, Tom, you're trading it intraday. What do you do? Right? Is that
right?
Okay.
Yes, that's the exact question, right? I see. Okay. So first, okay, yes, that's my question.
Okay, yeah. So what I'm okay. A lot of as you know, Tom, we've got prop traders, and you've had a number of people under you trading before too. You put the same information in front of 10 different people. Sometimes they do 10 different things. You know what I mean?
Yeah.
Like
right.
it's just the way it goes. But the way I read this information, and I'm very, very partial to longer term inflection points.
Okay.
So that being said, I'm looking at these weekly and daily numbers, this 2060 and 2066 from the weekly unfurlows and the daily unfurlows, and I'm trying to use that, believe it or not, as an intraday kind of barrier.
Okay, I just changed it. Okay, cool, man. Okay, that's what I just did. Okay, I just changed it. Let me look at it now. Okay, cool. Yep.
It's really beautiful how we did sell off so hard yesterday. Break down below both of these, close below both of these, basically these 2060, 2066 areas, and now we were really rallying as of 10, 20 minutes ago. We had rallied back up 15, 18 S&Ps back up into this area. Yeah. So
that's a gift from the trading gods, man.
Yeah. So I mean, again, anything can happen. I mean, this thing can keep going north. You got to keep your eye on it. You got to make sure the stops are in there.
Right.
But I love it how it gave us a chance to get short again, basically.
I know, man. It's sick. I know.
Yeah.
I know. Exactly. Right.
Yeah. So what's your take, if you don't mind me asking? The scanner is kind of putting round pegs in round holes for us. I mean, it's identifying the healthcare section. We've been beating the table that was if you're going to be in a group long, that's the one you probably need to migrate to, and that's actually been showing itself. You go to our ETF grid long term. I mean, XLV, that's where those greens were in yesterday. The Aetnas, the ABBV that you were talking about. What was the other one? United Healthcare, all those. But how does this Greek thing shake out in a couple hours whenever the expiration thing? What does that do to the euro? I mean, I haven't figured that out.
Well, it's wild is that there is no doubt that was a counterintuitive move yesterday, meaning that just deviance, okay? Because the reality is that it would make sense that the euro got croaked. Now, when I look at the aspect of how the dollar gave it up versus the euro, it's like, to me, the dollar index can get up to that 96.69 again because it had some juice there. But it certainly doesn't want to do it today because there's nothing. There's nothing behind this move today, man. You know what I mean? But this move today, it can't get out of his way. I
mean, how mind-boggling is it that gold is sitting at 1170? I mean,
I know. There's no bias. No, listen, I agree, man. What has happened is this. This is my take on gold goes like this. For some reason, the gold contract does have price strength to me and volume. Silver doesn't. and the gold equities and the silver equities really don't. So it's like, okay, so the metal itself does have something behind it. We'll see how this shakes out, man. Because that divergence, we know divergence is not a great thing, but like the way gold's trading this morning, I might. Let's go through that because to me, I love the scanner. I've been using it, and it's so powerful. It's unbelievable, man. I mean, it's like John said, if you're, it's just powerful. Period. It picks them out for you. It gets them very quickly.
Right.
And so when I'm looking at gold, I mean, I like what it's done right here. I got 51,000 contracts. I'm going against the trading day from June 5th. We had 151. I'm saying to myself, man, that's a nice little setup.
Right.
The bottom line is, okay, is there going to be a buyer coming in? Like when I look at this, if this thing gets to 67, I'm tempted to buy it. You know what I mean? So.
Yeah, I mean,
now I wouldn't hold that unless I got some strength, but I'm not. I've only gone against the scanner twice, man, and I've lost both times, so I won't touch it to it.
I know. On the topic of gold, I've got the scanner up. I've got our future section up, and it's got the August contract sitting there, and I'm going to do a little filter. I'm going to say what's trading on the bottom of our dailies, and I'm going to choose only match results, and that this is kind of pointing out, okay, the S&Ps are sitting right there, obviously. I don't know if you're seeing this.
I am, yeah.
We've got bottom, we've got gold bottom, lean Hawks bottom, Japanese yen or Japanese Nikkei bottom. We've got NASDAQ 100 sitting on the bottom. Okay, now what does that mean? What I've looked at and tried to find in the scanner, just in our futures section, not the, there's 3,000
cool instruments. How you did that. I see that. That's cool, man.
To mow through, but I'm looking at instruments that are sitting on the precipice of either, like it's bounce time or it's time to give it up, and you may get a little whoosh.
Going to hell. Hell in a handbag. Right? Yeah, right.
Yeah. So this thing will identify, those types of scenarios. In fact, and gold is in there. S&Ps are obviously in there. The NASDAQ's sitting right there. But I'm going to go back and I'm going to show you something which is really cool. We're going to go back into our S&Ps. And I'm going to go to our heat map grid, click on that. And I'm going to do a little bit of a sort here. I'm going to go, what stocks are on our daily grid sitting near the bottom of our profiles, right? And I'm going to do only matching. And guess what? These are the stocks. Now, you've got to kind of look into this a little bit farther, but like EQT Corp, Family Dollar stores. I mean, these are ones you can reference the charts, find out where they're at relative to profiles. Now, this is one Family Dollar stores.
Tell me what you did in that sort again, John. Okay, so I'm looking at the screen right now. So tell me what you did there.
Right. Yeah, what I did is I went to my daily and I said, I'm going to find stocks that are sitting on the bottom of their daily profiles. I'm going to go down here and I'm just going to choose bottom.
Okay, great.
But something else I'm going to do. I'm going to try a double kind of whammy here. I'm going to go weeklies and dailies. All right. Chipotle Mexican Grill. These are dual time frame confluent lineups sitting at the bottom of the profiles on both of these. These are stocks that are in play as far as technical bounces or maybe some follow-throughs. I'm going to pull one of these up for you. Ford Motor Company, Tesoro Petroleum Corp, Dr. Pepper, Chipotle. Let's look at Chipotle, CMG. All right, now the scanner just finds opportunities. That's one of the things it does. So I'm going to pull up CMG, and I want I want you to tell me. Now, this is you. I know your stance on this stock because I've listened to you. We're trading right at 600, another whole number. We're trading right below profiles here on the daily and the weekly. If the writing's on the wall. I mean, it's saying, this is a weak stock in a market that's been kind of going sideways at best, showing its hand early, and now we're sitting at the precipice of a cliff on 2 time frames. You got a trading opportunity here. This is just.
Yeah. Let me put this on a weekly.
Right.
Okay, so I got the baby up. So we're at 600. This is interesting, man.
Yeah. So we're at a hole number 2, and the market could drag this thing down even farther. But one of the cool things is I'm going to reset this. This is one that I think everybody really loved to hear. I'm going to say what's hanging at, what's still positive on the weekly, still strong, but at the same time possibly has pulled back to the bottom of a profile on our daily. So it's at maximum. It's still a strong stock relative to profiles in the long term, but it's pulled back to maximum support. Cablevision, Time Warner, Zions Bancorp. This scanner will find setups for you relative to profiles. And it's really cool.
I mean, which is amazing. Yeah, no, there's no doubt, man. I mean, it's going to be wild watching this whole thing shake out today, because this is, that bounce in the S&Ps, we'll know when this market opens, but that bounce was about as sweet as you could get. I was looking at the profile of the other side. And what does happen, is that when you have a big day like yesterday too, my risk parameter can go up a little bit. You know what I'm saying? Which I kind of like. Yeah. So it's like, okay. And you brought up something that was interesting, that when the profiles, when you're talking about the euro, that the width of the profiles, that's giving you a heads up. The volatility inside the euro, and that would mean the dollar also is going to be pretty dramatic, right?
Yes, it's just an indication that you better strap your seatbelt on. And I want to go back to something you said right then that's super important in my mind. You talked about, you might want to take your risk tolerance and your position sizing, I'm assuming, may change and should change probably, I guess, in this type of environment. That's something that a lot of folks out there, when the volatility gets high, I mean, certain part of your portfolio, I'm not saying a large part, certain part needs to be, that risk on part, and then you've got the rest of your kind of safe money. In times like this, I always tell people, you kind of have to participate, and you have to trade a little bit lighter. You have to increase your risk tolerance a little bit, because you don't want to get shaken out of so many things. And what you said a while ago just brought that out. It was just, it's time to get in there and work.
And work. Yeah, no, big time. Because what happens is that the markets move faster. And which is pretty cool here, folks, is that when you get a bounce like this, bulls and bears can make money here. That's where this comes. But you better take it quick. There's no engagement or marry here. You know what I mean? It's like you're in, you're out. That's it. Because what we haven't had in years is that you haven't had moves of 10, 12, 15 S&P points in 15 minutes. And if you get them, take it. And then you got to sit there again and wait. I mean, that's why I like markets like that, basically.
Oh man, that's where people make their whole month and year.
Exactly.
What's wild, Tom, is you remember right before 2008, before that happened, it's like every short fund had gone out of business. They threw in the towel. Remember that?
I know. Yes.
And now, like most of the banks and everybody else has closed their proprietary trading groups, and all kinds of people have stopped trading. Now the volatility is going to get high, and it's going to get good for the people that are still hanging in there.
Totally, man. Yeah. Awesome, brother. Thanks so much.
Thanks for everything this morning. Awesome.
Okay, all right, man. Have a great one. Bye-bye.
Okay. Guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. One of the things I was showing a while ago, Tom was on the show, is picking out just a custom special sort. We said, you know, what's been hanging in there, what's still trading above long-term profiles, but is pulled back to a maximum kind of pullback support area to the bottom of our next time frame down our daily profiles. We took a look, you know, there were 3 candidates. It's kind of nice out of 500. You found some very unique choices here. Time Warner, TWX, just take a look at that. And this was the concept here. This is our weekly situation, strong stock, in a market, making new highs, daily, you know, long term, you know, just well above profiles here. But at the same time, in this pullback, has come back into a maximum support area, bottom of the box, bottom of the profile, bottom of the balanced area on our dailies. This is, you know, a very unique, ripe opportunity. It's a strong stock. You might not get hurt that bad if the market continues to go down. You're trying to buy inflection points here. And what we want to do here is just look at situations like that, make an assessment, figure out where we want to orient stops. If we feel like the market may bounce, which I'm not actually a big fan of that right now, these are candidates that just immediately get picked out. Conversely, let's take a look at Walmart, because this is one that has been on our radar screen for a while on the short side. just scanners picking it out every day of the week. And this week hadn't really pulled this up because there's been, just a lot of other things to talk about, but we had a new profile appear above price action. We talk about this all the time. That's a very bearish sign. And this has not been, something to, strap your seatbelt in. This is the daily situation. Scanner's been all over this, below profiles, all time frames. You want to look at stocks that aren't going to be painful if the market rallies. This has been one of those candidates, and it's been like watching paint dry going down. But one of the things I've realized in trading, boring is good. Successful trading is supposed to be boring. Try to keep that in mind. I can't say that enough, actually. So let's go back to the scanner. Let's kind of look at our ETF situation. This is our weekly ranking of the 9 major ETFs. We're actually putting 21 more ETFs in the next week. You guys need to get a demo of this and start playing around with it, because I think you're going to find a ton of use. Let's go to the healthcare section. This is one, if you want to hide right now, you've got some great candidates to hide in right now. Cigna, I'm looking at just right across profiles here. Hospira, Perkin, I can't even say that. Perkin-Elmer. I'm sorry. I'm from North Carolina. Tenet Healthcare, Universal Health Services, obviously United Health Group. You've got some great names to hide in right now. If you think the market's going to go lower, and I'm kind of partial to that, I'm looking at our, still looking at our positive long-term breadth on our XLV, and this is so cool that we're giving breadths now on ETFs. I mean, nobody's doing this. This is a very unique data set. And as we go into our index grid here, excuse me, go into our S&P, is just going to kind of update you right now. We're getting closer to 9 o'clock. There's some stocks starting to open. Breadth staying relatively negative here. Obviously, that long-term breadth is negative. I cannot, in this type of environment with the information that we have, I cannot get long in a large way right now. There's no way. I'm looking for short situations, and I'm looking to place stops in case I'm wrong on the short side. Guys, it's been great. Thank you, Tom and Brian, for calling in. That's always a pleasure for me and everyone else. Stay tuned. Larry Pesavento's next. We'll pick it back up again tomorrow, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.